listening to the market and hearing what it's saying. In order to hear what the market is trying to tell you, you must first know exactly what to listen for. What you are listening for are price action clues, left behind as the story of the market plays out across a chart, and just like reading a book, in order for the current page to make sense, you have to know what happened before, so that means you have to know how to analyze the past price action to make sense of the current price action, and use that to make an educated prediction about what might happen next. You see, any single bar, by itself, really means nothing. It's the bar combined with the surrounding market structure or context that paints the picture of that market for you. Once you start following a market long enough, you will begin to know it intimately and start to get a gut feel for it. This comes with time, but it's truly what hearing the market is all about. Now, how exactly do you listen to the market and hear what it's trying to tell you? You do this through price action analysis, and I am going to give you some specific examples of this below. The charts are the market's way of speaking to us, but if you don't know what to listen for, the message will go right over your head. Let's take a look at some of the main pieces of the price action language of the market. Recent price behavior and market conditions. The first major message you need to learn to hear on the charts is whether or not the market is trending. If it is trending, that's very good for you, because trend trading is absolutely the easiest way to make money in the markets. If it's not trending, then it's probably consolidating either in a large trading range, which can be good to trade, or a very small and more random trading range, choppy and not good to trade usually. This is an important thing to learn to decipher early on, because it really dictates which direction you are looking to trade and what your overall approach should be to that market in that condition. Notice in the chart below that price moved from a period of choppy or sideways price action to a strong breakout, then a pullback to the trading range midpoint, before an uptrend took hold and carried price higher for months. In this image, price was trending higher aggressively before pausing and entering a long period of sideways price action. Obviously, the trending periods were much easier to trade and more fruitful, yet many traders continue to trade and lose their money because they don't know how to interpret the language of price action properly, which was clearly telling them the market was entering a period of more difficult to trade price action. Key levels and perfect versus imperfect technical analysis. Perhaps the next most important message the market can send you is how price is reacting or behaving around key chart levels. Sometimes, a market will respect nearby levels very well, almost exact or even exact in many cases. Sometimes, not so much. I prefer to trade markets that are respecting key levels because it tells me that for whatever reason, this might continue in the near future. Once you identify these levels, you can then wait for high probability price action signals to form at them. However, if price is not respecting levels very well, you may want to avoid that market for now. How price reacts around obvious key levels is extremely important. Are we technically perfect at the moment, or are the technical messier and imperfect? False breaks of key levels and contrarian signals. Human nature and our brain wiring makes most people really bad traders. It's because when we look at a chart and we see it going up, we feel like it's going to keep going up, But this is usually about the time it's going to go down again. It can be very frustrating to the beginner or to the trader who does not yet understand how to listen and hear what the price action is telling them. There are price action clues that tip us off to when a contrarian move is underway and price is about to head back the opposite direction. One of them is a false break of a level, and of course there is the fakey trading strategy as well. Note, in the chart below, price made a false break of resistance before reversing lower again in aggressive fashion. Failed price action signals are awesome. Wait, what? The failed price action signal. Yes, they can be painful, and indeed sometimes a trade simply does not work out. That's a fact of trading you have to deal with through proper risk management. But sometimes failed price action signals can be very powerful signals themselves. For example, if you see price violate the high or low of a particular signal that you thought was going to have the opposite outcome, ask yourself, what is it telling you? What is the market trying to tell you? Don't overthink it. If you see a price action signal fail, that is a strong clue that price may keep moving in that same direction. Event areas and recent profitable price action signals. When you see multiple price action signals that worked out coming from the same or similar area, you may have an event area, and if you see another signal at that area, it's a very strong signal to consider. Notice the pin bars this level. When the last one on the right formed, you missed out on a hugely profitable move if you didn't know how to interpret the message the market was giving you. Conclusion. My trading approach is based around watching charts daily and interpreting the messages being broadcast from the market. We need to be there to listen for it, map it and interpret it. Think of it as reading a page in a book every day. In the trading world, that means at the New York close every day Monday to Friday, I am there listening to the message being broadcast, that is reading the price action, mapping the charts and deciphering its hidden message. However, that does not mean that I am sitting there all day staring at the charts. I have my planned times to check the markets each day, and if I am not hearing anything from the charts that day, then I forget about them until tomorrow. I don't sit there trying in vain to force something that is not there. 9 times out of 10, I don't take action, but that 1 time out of 10 that I do take action, I am pulling the trigger on the trade like a deadly sniper, waiting to take the kill shot once the proper trade setup is in focus. If you want to learn more about listening to what the market is saying and learning to interpret it effectively, check out my professional trading course for more information.